Okay, welcome to episode 9 of the DX Digital Transformation Series. We have a fantastic topic and even more fantastic guests today. Thanks for everybody tuning in. Today's topic is run the bank versus change the bank. Lessons learned from transformation projects, and we have Nicole from Accenture, we have Vivi from UBS, and we have Roland from Sygnum. But it wouldn't be complete without my co-host, Andreas. Andreas, how are you doing today?
Very good. What about you?
Not too bad, not too bad. I'm very excited. It's the first episode in November that also shows us not much time before Christmas left. So my name is Lars Fudisch, former journalist and professional storyteller, and together with Andreas, I'm honored to guide you through today's episode. And on the topic of run the bank versus change the bank, just some figures to put some context on where the world is moving and transforming to. Most of you might know that Ant Financial is going public soon with a valuation of $310 billion. That's a market value roughly comparable to the one of JP Morgan Chase and way above many other global banks. Another Chinese example is Tencent. Their revenues just from fintech and business services grew by about 30% lately in Q2 to 4.3 billion. So we see there's change coming, not just from the incumbents, but also from a new challengers from the tech side. And that's what we want to look at a little bit today. Reminder, as always, we have sufficient time for questions from the audience. So please use the Q&A function. The Q&A function in the Zoom call to post your questions and or upvote other questions that you like. And we'll do our best to answer as many questions as you have there. Let's start with Andreas and giving us a quick update on where are we with the DX Awards, because we're already at the shortlisting and soon it's decision time, right?
Absolutely, Lars. It's decision time. And so I just want to quickly give a short update where we stand, and I'm going to keep it short. But there is a reason why we're here today. So this webinar series has been initiated by the DX Digital Transformation Award that we started with the Swiss Jam just a couple of months back. And we come a long way. So I just want to quickly share some information with you. One further, Clarissa. Okay, so where have we come? You know, what have we achieved so far? So as you can see, we have 43 applications in from different industries, from SMEs, from startups, from MNCs, from the financial sector as today. So actually financial services is one of the bigger subcategory, and we're very, very proud about that. And yeah, we were also able to bring in, you know, a highly competent jury. That's very important for us, obviously, to have an objective assessment. And related to that objective assessment, we have been collaborating with Deloitte, obviously, to develop a maturity model where we can really assess the different applications. So we're really happy about that. And obviously, we have a team behind that is now also during that session coordinating everything and doing a tremendous job. So also a big shout out to the team that is working on the scenes. Then I want to thank you quickly the sponsors. The sponsors have been amazing support from the very beginning. So we have DKSH, we have EDB, we have Tilke, Crealogics also, and we have broad support, and that was always very important in our efforts. We have broad support from the ecosystem here. So we have all the chambers that have joined in, the Eurocham, the German chamber. And so we are very, very glad that this is not only a Swiss initiative, but it's really broadly anchored in the ecosystem here. Then just a few words to the DX Leader series. We have initiated that, as mentioned, because we wanted to have some best practice exchange. As of today, you know, we had 8 episodes. So we are now going into the 9th episode, which is really, really good. And we are really happy to also welcome, you know, these guests today on the topic of Run the Bank, Change the Bank. one further. Okay, just to wrap it up. So as Lars mentioned, we're now in the pitching sessions. We are shortlisting all the companies. We are talking about 5 subcategories where we have between 7, 8, or 9 applicants. So we need to shortlist that to 3 companies by subcategory, and then we will have the public pitching, as you can see here. So please join these sessions. It's open to the public. You will be even able to vote. So if you know a company that is participating, please join and make sure you vote for the company. With this, I would like to hand over to Lars. Thank you very much and enjoy the session.
Thanks, Andreas. Okay, so let's kick off the topic, as always, with our poll of the day. So we want to know, what do you think, our dear participants, what share of business do you expect new digital banking entrants, fintech, big tech, whatever, to take away from the more traditional banks? Is it less than 1%? Is it 1 to 5%? Or is it more than 5%? And to give a timeline, let's say in the next 5 years, okay? So how conservative or excited are you about the new entrants? Let's say about the next 5 years, how much will the new challengers, fintech, big tech, take away from the more traditional banks? And let's vote.
Lars, any view from your side?
Well, I'm already kind of a little bit worried that if I might call UBS traditional bank, I might already get in trouble, right? So I think that's more than 5%. But again, what do you take away? You know, assets under management? Is it revenue? Is it market size for a market that's growing? So it's I have to admit it's not an easy question. It's more like an indicator of how big is the impact. What's your take, Andreas?
Yeah, I had exactly the same thought. We didn't specify what are we talking about, revenues, assets under management, or what have you. So no, I'm with you. I see a strong intake of new startups that will gain share.
Okay, let's have a look. Let's have a look at the results. So what do we have as a results? And the numbers are, yeah, very clearly at over 70%. So put on some warm sweaters, traditional banks. And with that, we're moving over to the introduction finally of our guests. So welcome again, everybody. Run the bank versus change the bank. So Vivi Gutmannsbauer, he's the COO of UBS Asia Pacific and operating head UBS Wealth Management Asia Pacific. Welcome, Vivi.
Thank you.
And I know you wouldn't be happy if I called UBS a traditional bank, right?
Look, I'm fine with that. The problem just is we cannot only be traditional, because our client base is so deep, so broad. We have to be everything at the same time. The question is, how much of everything are you, and how much can you afford to be everything for everybody?
Exactly. Then we have Nicole Bodak. She's the managing director at Accenture here. Nicole, are you surprised about the result, or you think it should be more, even, or less?
Yeah, I'm probably more in the lower end category, because I think what's going to happen is that the traditional players will play a major role on a continuous basis, and the new entrants will take a share that's underbanked or unbanked. So it's a very different segment. If I take UBS, for instance, and the segment that UBS is focusing on, I don't think too much will, I mean, it doesn't mean that UBS doesn't have to change, right, and be the biggest robo-advisor in the world, because there's other competition with everyone pushing ahead on what we're doing. But I think new entrants, as in the Tencents, the Ant Financials, etc., it's a very different segment they're focusing on at this moment. We'll see how it is in 10 years. Next 5 years, I don't think it's going to be more than 5%.
Good, thank you. And last but not least, we have Roland Schwinn, managing director at Sygnum, a challenger in the market. So what's your idea? It has to be 20-30% to make you happy?
I think it pretty much depends also on geographies. We're looking at Asia. We know we have a lot of underbanked or even unbanked markets in the developing countries, but also depends on the services at the end. So in Europe, it's not that difficult to get a consumer credit loan if you want to buy a new car. Here in Asia, it's very different in some countries. So it depends very much also if you break it down further to geographies. But I'm very confident that the 5% overall is going to be something realistic over the next years to come.
Okay. Andreas, you're the digital transformation expert.
I have the honor. So just a quick one to kind of Vivi, you were saying before, you know, we have to do everything, and that's a bit the problem of the big player out there, right? So you have to be everywhere. But obviously, if you look at digital transformation and initiatives, you have to make a choice, right? That's an investment decision. And so, you know, with your experience from you know, back or front to back transformations, what are key learnings that you have had over the years in terms of prioritization for UBS?
Look, first I have to tell you also a secret, Lars. As a COO, you're also actually a professional storyteller. And I have to come up with all those stories in order to get the money to invest in all those nice solutions for our clients and employees. Now, but fun aside, look, actually as a COO, every decision you take is always an investment decision. It's always about money. Doing something or not doing something somehow has an impact in money. So what we try to do is you need to aspire to be there where your clients and employees expect you to be today, tomorrow, and after tomorrow. Now, as said before, our client base is very diverse, which also means we need to be able to offer, like the Swiss bank to the people there, where we also a retail bank, we need to be able to offer this, but at the same time in Asia, we need to be able to offer to our very big, highly sophisticated clients. And in the end, as I said before, you cannot invest in everything. So you need to take decisions. So sometimes you need to take a decision to invest in something which at the moment is just like, I always say, like it's as fireworks that everybody can see and it looks nice. And it's about a little bit of money. And everybody thinks you're super digital and client experience like hell. Sometimes you need to do those things in order to also be invited into this interview with the Swiss Jam here now. But honestly saying 80% of the time, what you do, you invest in things that actually support your client base today, tomorrow, and after tomorrow, which means it's a constant transformation. And you need to be careful not to run too fast, because you might lose employees and clients by running too fast, but also not too slow.
So Vivi, these fireworks that you were describing, I mean, that's obviously a lot of fintechs, you know, can go after these fireworks because they don't have a legacy.
No, that's not what I mean. That's not what I mean.
Okay.
What I mean is you have a lot of big players. They come out with a super duper last solution for the clients, which is super fancy and the client experience that has never been there, but actually it's just the same thing everybody else is doing in a different color.
Oh, okay.
For me, the fintechs, it's a different story. The fintechs is not the fireworks. The fintechs actually is the inspiration in the whole thing. And this is also when we looked at how much do they take going forward. Actually, I said more than 5 because I hope it's more than 5. Because if it is more than 5, we have to move. And if we move for our clients, which is a good thing.
So are you sometimes jealous of fintechs that are maybe quicker and more agile than you are as a
every day? Look, every day, honestly, absolutely. But honestly, if you would ask me now today, would I now rather work in a fintech or at UBS? Difficult decision, because I also love this huge environment where it takes a longer time to move something, but if you move it, you move a tanker. Or as I think Lars said it last time when we chatted, he said like an island. You kind of move an island, and it can be pretty magnificent in the end.
Yeah.
Nicole, maybe over to you. You've seen more than enough transformation projects across different institutions, especially in finance and banking, from product-centric to client-centric, advanced technology implementation, the good, the bad, and the ugly, right? So what are some of the most crucial lessons in that kind of journey that you've accompanied?
Yeah, definitely seen the good, the bad, and the ugly. So I think, I would start probably, there's loads, right? But just to hone in into a few, I would start with vision and leadership, because the last thing that works is to take the current processes and put technology against it, because all you get in the end is very expensive old processes, right? So it really has to start with leadership to think about where they want to be with their firm. I think to Vivi's point, right? Where do I want to be tomorrow for my clients? What is my business model around it? Does it have to change because of that competition that's coming in? And then you align your digitization efforts towards achieving that vision. And obviously client experience has to be at the heart of everything. And you have different clients that you need to take care of. But it's really about that vision on where you want to go, and then storytelling, right? Telling a compelling version of that story to your organization that everyone follows. And I think that future vision, especially in banking, some of the things we discuss right now with our banking clients is a lot around invisible banking, because banking is not necessarily anymore about going to the bank or going to a bank's website. I'm ordering my pizza, it gets paid through my app, right? I'm taking my Grab. I clicked the wrong button and I have an insurance. So I did actually, and then I complained to the insurance provider, which didn't work at all. I had to call the Grab people. So much to client experience. Or in wealth management, in Vivi's world, will it fundamentally change that people want good advice? No, it won't, right? Because people need good advice on how they protect their wealth. But will it change on how we provide advice and what the spectrum of that advice is? Yes, it will. It will be much more holistic. It has to be. It has to go beyond just financial products into non-bankable assets, non-investable assets. And what does it mean for your technology? Right. So really that vision and leadership. And then to support that, technology choices, yes, you have to make the right technology choice. But much more important is to build the right talent, skills, and supportive culture. Because again, to that misconception of technology being a silver bullet, it's not, right? Tech stacks are just tools. And unless we find a way of bringing the people along, both from a perspective of implementing the right things, changing your operating model, your process, and then also in terms of adapting to that change so that people use that new technology and drive the results with it and the value, you'll have nothing. So I think, that's kind of for me the key things. It's not the technology. The technology is important, but it's really vision, leadership, capability, skills, culture, communication, taking people along, adoption, and so on.
So then just a quick follow-up question. So, that's the banking and finance sector transformation advice. But is it then actually any different from any other industry? Leadership, vision, not really, right?
It's the same across every single industry. I think what is exciting nowadays is that everyone looks outside a little more to borrow from other industries and what they're learning, not just from these just general truths on what has to be true to be successful, but also learning on how they're pushing the boundaries in business models and ideas, etc. So that comes on top, but it's no different. It's the same everywhere. But many get it wrong, right? I think it's quite funny. Everyone always says to me, yeah, that's obvious. And then a year later, when people run against them, it's like, well, I told you that this probably has to be right, but it wasn't so obvious. I don't know where we can agree to that or not.
Let's ask Roland what is obvious for him, right? So I think he has certainly a very interesting perspective as the CEO of Sygnum here in the region. In the briefing, you were saying we are not the leading digital asset manager. You are one of the leading digital asset manager companies. So I respect that. But you're coming now from a greenfield approach, right? And so I would have two questions. One is, how is it to partner with banks and also maybe sometimes compete with banks? And the second question is, what are challenges that you're facing as a challenger, coming from a greenfield?
Yeah, thank you, Andreas. Please let me do a slight correction on the perception. We are not only an asset manager, we are actually a digital asset bank. So we are a FINMA regulated bank in Switzerland. And we were the first digital asset bank regulated by FINMA, and so the first also in the world. So our offering comprises not only asset management, but also the entire value chain of the tokenization of assets, starting from the token issuance, token generation, the primary placement, the settlement, the custody, but also the secondary market trading, where we just obtained the approval to launch our OTF under Swiss banking regulation in order to trade future digital assets. But we also can this is what Sygnum is doing, also trading and is a custodian for cryptocurrencies such as Bitcoin. And it's offering these services also to banks, where Sygnum works with banks as a white labeled insourcer. Respectively, the banks can outsource their service to Sygnum, and the first banks have just been onboarded, also doing so. So that gives them a chance to use an existing service with another bank who also does proper KYC AML, rather than investing to the infrastructure by themselves. As a third function, we are also asset manager, which is based here in Singapore, and where we offer a new generation of asset management products, which are in some ways still traditional, but the content, of course, is completely new. For example, so we have a fund which invests into crypto hedge funds, single managers across different trading styles, which is the structure is pretty much the same what you had 20 years ago in the hedge fund space, where the CPOs invest into CTAs. And then we also have an ETF or ETC out there, which represents tokens, representing again infrastructure protocols in the blockchain space, where high net worths and also institutions can invest into. So it's a new generation of products, more from a content perspective, rather from the packaging perspective. Coming back to also what Nicole has said, I slightly disagree with the view. My view is that technology is one of the main drivers also behind it. And so what we have been building since the very beginning is also putting that new technology, which in the specific case here is blockchain or distributed ledger technologies, together with existing technologies like a classical core banking system. And we went through all the challenges in between, including, for example, the fact that when we had to mirror Bitcoin holdings in our core banking system, you need to see how can you accommodate one Satoshi, which is 8 digits behind the comma, in a system which has been mainly for FX, and that kind of challenges, and many others, of course, including also the very big challenge to how do you do proper AML also on incoming, outgoing transactions which come in as digital assets / cryptocurrencies. So all that kind of things, and that was all only enabled by technology. Without going further into the details or making it too long, it has a lot of aspects around efficiencies you can generate by using technology. And my background is traditional derivatives trading and clearing, and also stock markets and stock exchange. So I'll give you one example. In the old world or in the existing world of paying dividends, the process to pay the dividends from the identification of the eligible investor until the final payout is around 5 working days. If you would have a digital token representing the stock and a digital share registry, you can do that within 1 day or within hours, actually. The beauty of the technology is here, and this is something which is very revolutionizing when you come from the traditional world of trading, settlement and custody, is that the DLT technology allows you to do the trade, the settlement, and even send it into the custody in one transaction only.
Yeah. So can I conclude with that the green field is not always easy. You need to make the decisions on the technology, the right decision on the technology, but still you have the flexibility, obviously, then to break up traditional ways how banking or you were saying stock clearance is done and so on. Right.
Yes, and also link it up with existing components, what you need to have for a core banking system, and of course all other peripheral systems such as the client management system, etc., etc. So, and this all together is then the challenge you are going through when you use that new technology to provide that new kind of services around the new asset class and put it all together, compose it to offer banking services or regulated services around it.
Okay.
Maybe building on what Roland said, and that's for Vivi and Nicole, right? How do you balance successfully old or let's say established business models with the need to constantly innovate, right? There's a saying, never change a winning team because they're winning, but you know, like in football, a winning team can only win that many years before there's a better team, younger players, smarter tactics. So how do you balance this kind of stability versus innovation? Also with a background of, if I really want to make big changes, the investment is now, but I'll only see the return in 4 or 5 years if it's a big project, right? Because nobody wants to cannibalize your own business. So it's like, I think 20 questions now in one, but I think the topic is balancing innovation and just, or a better mousetrap versus real innovation.
You want to start, Nicole, or should I?
Maybe I start and you can bring it to life with an example. Yeah, no, I mean, it's a brilliant question, and it's one that every one of the more traditional players grapple with, right? And what we call it is the wise pivot, which basically means that you have to continue to strategically invest into today's core products and services because you have to get most out of that. That's where your money is coming from today, right? And how you pay for the future. And you do that value position for the future. And for the future, I think you can take a much more disruptive approach to experimentation where you innovate a new business with new technology, new experiences, take different talent, tap into new ecosystems. And with that kind of see, you know, what works for you and plan ahead into the future. I mean, that's the two extreme angles. Obviously, there's lots of nuances between. And I think a question a lot of our bigger clients have is around how do you finance the future, right? And there's many ways of addressing the current operations where you release enough money to finance the future as well by just making it better and better. And to Roland's point, right? I don't disagree that technology is very important, and we wouldn't be where we are if technology wouldn't have evolved to where it is. So it's an enabler, right? It's a very important enabler, but it's an enabler. And to use the technology to really drive efficiencies and automation, et cetera, in the current business, where you can reduce your cost and run rate to then invest into the future at the same time in a maybe two-speed process. I mean, that's ultimately how you go about it. Vivi, over to you.
Oh, look, I think you're spot on. Now, the difficult thing, honestly, here is that, as you said, the traditional business is paying your salary today. And actually, this is very dangerous because those revenue streams are not dropping as fast as a client need or behavior can change, which means when we go back to Lars's football game, you are winning in a game and you think it's football, but actually it changed and you start to lose and you didn't even realize because you still play football, but they switched to golf in the meantime and you're not realizing it. So, and therefore you need to actually be very close to your client base, I think is the secret here. And what we love to do is what we call co-creation, which means we sit together with clients. We sit together actually even more with our employees, because also in our employees, we have everything. We have from the very junior talent to the very senior old people like me, we have everything. So if you are close to them and you co-create the future together with them, I think you have the ability to be closer there. Now, of course, sometimes you need to take a decision where you're not 100% sure is it the right one to take. And as you probably remember, UBS brought the global wealth management platform now 3 years ago, actually over to APAC. Now, this was a very, very expensive decision to do. And actually, until the beginning of the year, not everybody was sure was it the right decision to do. Today, you will not find anybody saying this is not the right decision, because this platform enabled UBS here in the region to grow so dramatic without any operational hiccups, because this engine is just like running with like hell. It's just working. Was it a guess at that time? Yes, it was. I give you another example. I think it was about 10 years ago, we had one of the IT guys coming and say, I have an idea here. It's called any. What it means is any device, anytime, any place. And he said, we should enable all our employees to be able to work on what device they want, when they want, and where they want. And at that time, everybody said, yeah, but you come to the office to work. And this is the place where everybody works. Now, somebody clever in the bank said, but yeah, probably there might be someday a scenario where this would be helpful. And by the way, actually, to provide the laptop every second year, a new one to all employees, because everybody wants to have the latest thing, is also kind of expensive. And we cannot give everybody the color of iPhone they really want. So it's actually easier. Everybody buys whatever they want, and we give them the flexibility to work with that device on UBS. So we did it. And actually, when the crisis hit in the beginning of this year, were we ready? Not yet fully, but we just accelerated. And guess what? I mean, today we have as many people working from home at any point in time as we want, or wherever they are. So you need to take those decisions. Some of them pay off, like those two. Some of them don't. But this is life.
Yeah. So Vivi, I have one burning question that was on my tongue almost now for a couple of minutes. So how relevant is the incentive system? You know, and you don't have to go into internal topics, but obviously balancing this short and long-term focus within the organization. You have different forces pulling in different businesses. Also, you have the investment banking, the trading, right? You have the wealth management that is a bit more traditional. So how do you contain these forces, and how do you make sure you have the right incentive system in place to manage that kind of balance? And the second part of the question is the recent, increase of fixed salary. Is that a move in the right direction, or?
Look, is there a change in the financial industry going on? Absolutely. And I don't even know if the recent changes are on the trajectory to that. I assume it is, but certainly that there is a transformation. And the other thing is, I think it goes back to culture in the end. If you are not able to establish the right culture where people can challenge each other, and where you in the end take decisions that is not immediately filling the pockets of everybody, but probably some and some not, and the others only down the road, and where you have a culture where we actually respect what other people are proposing to do. If you do not have that, you will miserably fail in a big company. And this is, I have to say, Sergio now gone, and now we have Ralph since yesterday, but Sergio worked on culture a lot. And this culture was a big part of what made us successful, actually, to balance those things. And yes, help the front colleagues to be successful, but at the same time, they trust us to do the right thing and spend a little bit more money on the platform and then the capabilities, be it internally or with the clients, to also make us successful in the future. UBS is 150 years old. I had the honor to be part of that 150 years for 22. I see it as my duty actually to enable UBS certainly for the next 150 years.
Okay.
Roland, obviously a new digital asset investment firm or bank can't have that tradition of 150. But you also don't have that legacy of 150 years. So how much do you value the opportunity to move as fast as you want versus some clients or partners said, if you're not at least 150 years old, how can I trust you? How do you convince them?
Yeah, first of all, I think with regards to the offering, you need to have, in order to convince new clients, there must be a certain value proposition. Either others don't have it, or you offer it at sensational pricing or at sensational service. I think Sygnum belongs more to the category others don't have it. At least the banks don't have it now. We have seen a brief announcement last week here in Singapore that one of the larger banks would even build a cryptocurrency trading platform and also securities token platform. But this bank is not the only one. The first bank actually launching their own cryptocurrency exchange was SBI Group in Japan last year, where they launched their own exchange in April already, and other banks are also preparing, and others are a bit further away looking into it. And this was one of the reasons why Sygnum was founded, to make those assets bankable. And then it doesn't stop there. It doesn't stop with cryptocurrencies, because the technology would use to tokenize assets is just the same technology. And this is where we also see the future in the tokenization of assets. So coming back to your question, belonging to a category where you offer something that others don't have. And I can tell you myself, I'm a kind of early cryptocurrency investor. It was a huge challenge years ago. If you would buy Bitcoin, my first Bitcoin took me 2 weeks to get together, not because it was so expensive, it was compared to today, very cheap back then, but it was so complicated. And there's a lot of platforms you need to subscribe to, but you actually do not really trust. Then you need to send money over, and it was very complicated. Then it also, you need to find out how you store it. You need to find out how you do this and how you do that. We went through all through that, but also we experienced limitations. If you really want to bring this to institutional mainstream, well, you need by far better services, and also you need by far better security with regards to the counterparty risk. And you have seen all the hacks over the years, be it Mt. Gox back then, be it other crypto exchanges which got hacked and everything disappeared, and the cases are going on till today. But as a regulated bank, it's different, right? So you can offer institutional investors a different level of certainty, security, and also trust. And of course, it's quite a way getting there. But again, it is an offer that has not been around before we started it. But it's an offer which is also now being adopted and also being launched by traditional banks more and more.
Yeah. So Lars, do you think it's time for rapid fire, or are we too early?
I think we can have maybe one more question that leads there, and that's what are some of the big technology transformation trends you are seeing as we're going into next year, right? Background 2020 was kind of a massive accelerator for a lot of digital transformation projects that would have taken 2 years, suddenly can be done in 6 weeks. We've seen that across industries, right? So now that the boat is speeding and we know we can do it fast, what magic will we see next year? Maybe kind of a glass ball outlook. Nicole, what do you think is the big trend in transformation that we're seeing next year?
Probably the more mainstream ones, I would say, and next year, right, it's not so far out. It's definitely around data analytics, AI. So it's massive investments going into that. And I think while banks have been on this journey for a long time, there was a long-term effort of cleaning up data, getting into the right place, into lakes, and I don't know what else not. And we will see more and more actual use of analytics AI for personalization of advice and so on, right? So really kind of to be more relevant to your clients. The second trend that we, for instance, as Accenture invest in heavily is cloud. While it has been around forever, we think it's accelerating, because not just this innovation that's coming out of the cloud providers themselves with native applications, etc. I think people just realize how big the business benefit can be if you get cloud right, and that involves both being native in the cloud, but also moving your whole estate, and maybe not the whole estate, but a big part of the current estate into the cloud. And the agility.
I have to ask you something here. I have to ask you something. Sorry to interrupt you, but the privacy and security, data security topic is obviously burning, right? So what do you do with that topic?
You can solve it.
you can solve it. There's a process around it, right? I mean, not everything can probably live on a public cloud. And some of our clients that work with secret data in that sense, right? Governmental secret data, you just can't move it to the cloud at this stage. But for a lot of the other ones, there's clear processes on how you engage with the regulators, how you get the approvals, etc. The question is probably more around how you move, right? What's the easier bits? What's the higher value? Where's the more complicated? Where do you refactor versus replatform versus just lift and shift and so on? But the business benefits can be tremendous. So there's a lot of investment going into that one. The digital assets, so Roland's world, tokenization of assets. We actually think it's now that we see this massive shift towards digital assets, tokenization, and also central bank digital currency. And once central bank digital currency arrives, it will fundamentally change how ecosystems work. And this is highly interesting. It affects banks, it affects corporates, it affects everyone in the ecosystem. So really interesting space there. And probably more looking forward, we started looking at quantum computing. I mean, not that I would know what it is, but I hear about it all the time. So I'll have to read up one day, but it's not 2021, I think. So I'll read about it later on. Let me pause here.
But you will sell the project anyway, even
I'll
if
sell it anyway. Yeah, sure.
Look, I agree with everything that Nicole said. I think digitalization will just continue and will be a big driver in employee and client experience and simplification front to back. And the whole pandemic actually is pushing that also in that direction, no question about that. But what I see, and especially talking with young clients and young people joining the bank, is actually sustainability and sustainable investments. Yeah. This is super important for them and for all of us, because honestly, we have one planet and we have to take care of it. And we all in the financial industry have leverage in doing the right thing. And therefore, I think this is a very, very good sign I'm seeing here. Young people really, really focusing on that and asking also when they join UBS, so what are you doing? How are you doing? How can we help? So I think this is one that Nicole did not mention, but I think it will, it's not that technology focused, but it certainly has technology.
Massive topic.
Yes, impact, but I think it's very, very important.
Has a massive data impact, right? The data you source to determine what is sustainable, where you finance, where you invest. I agree.
Just a quick follow-up to you, Vivi, because I mean, you know, everybody's talking about hybrid client servicing model, you know, having different touch points. Now everybody is on digital, and right. Is there going to be kind of a trend into the future where you also where the focus will shift a bit more also back to offline and kind of balance that?
Look, it's interesting. You observe everything at the same time on this earth. And not all the regions are doing everything at the same speed and at the same time. Now, there is definitely, in a small, very small proportion, you see people that say, all this digital, I don't know. And we still have clients that actually refuse to be digital and say, no, I want to talk face-to-face to my client advisor. Now, most of them, of course, go into digital because it's just convenient. It makes everything easier. And I think, look, working with UBS and within UBS just needs to be downhill. It just needs to be easy, and technology will help us to do that. But is this the end of the client advisor? Actually, I don't think so. Is it the end of a life cycle of a certain way of how they do that? I think so. But the end of one life cycle mostly is the beginning of a new one. And what I see is that some things will be taken over by the machine, but at the same time, rich people, especially when they're very rich, their life is complicated. And this is something that potentially an AI can somehow solve in the future, but an AI will never be as empathic as a client advisor can be in difficult life situations. And therefore, I see it will, in my opinion, for those difficult situations, it will always be hybrid, but the technology needs to be supporting this interaction big time.
Yeah, Vivi, I would slightly disagree. My client advisor is not really empathetic, so I think maybe AI could be better there. But anyway, so maybe over to Roland. What is your crystal ball view into the future?
Well, very clearly, feel very confirmed to see it happening now that digital assets, in particular Bitcoin, is on the way to become an accepted institutional mainstream investment. And you have people like Paul Tudor Jones or the CEO of MicroStrategy. You see tons of videos of them on YouTube, for example, talking about how convinced they are about Bitcoin. And I think this is something that I have been waiting for quite some time. But I was a witness also of that. I spoke to banks and to investors already 5 years ago about Bitcoin. But I've seen now the exponential growth of that adoption curve, not only mentally, but also with regards to real investments happening, in particular in the macroeconomic environment where we are in right now. And I see this trend continuing and will not stop here.
Okay, so let's do one or two rapid fire questions. And a reminder to the audience, we have the first questions coming in. Please post your questions in the Q&A section or upvote questions so that we can get to them very shortly. Very short rapid fire question. Successful digital transformation requires A plus B. What is your A plus B? Successful digital transformation requires A plus B. Nicole.
Vision and leadership.
I knew that somehow. Vivi.
Passion and stamina.
Roland.
Flexibility and the right technology.
Good.
Now we have the whole thing. Brilliant.
Digital customer experience personalization, right? It's a mouthful. Digital customer experience personalization. Are customers' expectations too high, or is technology just not living up to standards yet? Expectations too high, technology can't deliver. Vivi.
I think it's a question of, as I said, as collaboration. So companies that do not co-create with their clients do not have a chance to live up to the expectation, but also do not have a chance to manage expectations. So I think it's around this thing.
Yeah. Roland.
I think it depends pretty much on the services, goods, and also the consumers looking for what segment of services. It's a difference if I order my Barilla pasta online or whether I'm asking for a complex investment product.
Okay. Nicole, expectations too high or technology not ready?
Expectations are expectations, right? They can't be too high. They're just what they are. Technology can do whatever you want it to do. I think it's a bit what Vivi says. It's, in my words, I would say experience design matters, right? If you get the design right of the experience, if you connect it to, then you'll be successful.
Last but not least, rapid fire. Virtual consultation. Controversial or a real game changer? Vivi.
Game changer, a whole new world to explore.
Nicole.
Game changer, it's the future.
Roland.
Game changer and happening.
Okay, good. Then let's move over to the questions from the audience. And one was we indirect talked about it without calling it out. What do the participants think about the mooted DBS digital exchange? Is this a fintech game changer? Is it even fintech? The other BS, not the U.
I think that's for Roland.
Yeah.
As mentioned already, it's for me, it's not a fintech play. It's just the adoption, the acceptance of a new asset class, if you would say so about Bitcoin. But then when it comes to security tokens or tokenized assets, they can of course present any asset class. Here we talk technology. I think this is where again where the world is moving, and it's only one of the larger banks announcing now and getting ready for it. Yeah.
I think there is an interesting one. You know which one? You wanna? Okay, so I'm gonna take it. So this is for you, Vivi. It's a bit of a you need to do some time travel, right? So what would UBS look like if you started it today? If you were an entrepreneur?
it would be technically convenient and in the interaction at a fingertip empathetic.
Nice.
Okay.
That was a tough one. Okay. So
Maybe
what do we have?
next one. What role do corporate venture capital funds play in innovation? And our anonymous attendee said UBS and Sygnum just launched 2 in the last month. So what role do corporate venture capital funds play in innovation?
Look, I can talk about our fund,
yep.
Which is UBS Next, and it's a 200 million investment into fintech and the whole technology ecosystem. And this is not for us to make money. This is for us to find the new right technology. So it's all about innovation and getting the right ideas into the bank, but also collaborate with them, because we are closer to the client need that sometimes they are. So in that collaboration, a good idea can become an even better idea.
Roland, what's your take on that?
We entered cooperation together with one of the larger banking groups in Japan, SBI Group. And this is really, the contribution into innovation is really by finding the right investment targets across that entire space of distributed ledger technology, including also RegTech and Fintech. So it will definitely help to, for those companies qualifying for the fund, also then finding the right funding partner and the right strategic partner also for it. And you might be aware that the SBI Group has been investing alongside the entire value chain of digital assets, from exchanges, from OTC brokers, even traditional stock exchanges like Börse Stuttgart and banks, etc.
Okay.
You want to take the next one, Andreas?
Yeah, I'm just screening through some of them. So there is one interesting one from Janice Mata. Which market segments respond most easily, adapts most easily to digital changes? And what % of your client base is that? Vivi, you want to?
Yeah, look, I can give it a shot. Actually, it's across all client segments. And that's the interesting thing. I mean, there have been a lot of studies that also show that you cannot say that the older people are less interested in digital than the others. Actually, it's not true. We see actually some of our most heavy e-traders are older people, because just they have the time and they're fascinated by the technology, and they love to trade in the US all night. On the other hand, we have young people actually not wanting to do e-banking, whatever the reasons. So I think you cannot say it's either or. We have, how should I say, digital clients across all segments. That's certainly true. So, and the adoption, I have to say, and it goes back to when we started a new platform here in Asia. Actually, before we had the new platform in beginning of 2018, before we just had like static account information that you could have on your iPhone or whatever it was. Now, since then, we introduced all our e-banking capabilities, etc. And as of today, 60% of all equity trades at UBS in APAC are online within 2.5 years. So this is super fast. So the adoption of the clients doing it is fast. Is everybody doing it? No, but those that are doing it are really doing
it. Nicole, maybe to you, is it the Robin Hood generation that is driving digital, or?
I would give the same answer. It's not by age, right? It's by what people are interested in, what they're comfortable with. It's across age groups. So I echo that, what Vivi says.
Okay.
So then should we assume, Roland, that you mainly work with early adopters, or is it also across segments?
You would be surprised if you speak to people working with us, would be surprised about the age range and also their backgrounds. I think you find everything there. It's not, of course, it's for the younger generation, particularly those with more tech background, for them it's easier to adopt, but we definitely have also people even by far older than myself. who are also very, very actively not only invested, but also, yeah, I'm one of the, say, most age-wise, more senior people at Sygnum. But we have really friends and also the people we work with, advisors who are very, very up to date and spot on with regards to the very, very pure adoption of the technology. And this is quite impressive to see that also. Yeah.
Thank you. Question, what kind of takeaways are you able to share with Singaporean SMEs that don't necessarily have the budget and manpower and capabilities of a UBS or can afford to hire Accenture? How should they start to transform their business?
That's a great question. I've never thought about it because they don't have enough money to work with us. No, but I think, I mean, maybe one thought on that one, right? There's a lot of solutions out there that focus on making SMEs' life easier. And that's platform solution that provide the entire kind of back office services, etc., like 9 spokes, etc. So that's a great starting point. Get familiar with what's out there in terms of digital services by others or solutions. But otherwise, the same truths apply, right? Think about, what do you want to be excellent in? Put a plan together and then get the right talent to execute against it. And I think the challenges are exactly the same. To Vivi's point of we can't be everything for everyone and can't do everything we want to do, and it's investment decisions. So it's really that, what do you want to be excellent in? Where do you want to be standing out? Put your money there and start the journey and then get some basic stuff right. And then I think, there's a lot out there in the internet as well, especially people like us or the McKinseys and BCGs of the world issue papers about digital transformation all day long. We must be doing that for fun, I guess.
Nicole, I'm a bit disappointed you didn't mention DX leaders and the digital transformation.
Yes, part. DX leaders. Yes. Deloitte. I have to mention Deloitte, obviously. Even better papers.
Sorry for that. Sorry.
No, but it's true, right? It's exactly, there's so many places like that where you can go.
Okay, then maybe the last question, a short one for Vivi and Roland, because you have different approaches and we touched on it. What's the role of wealth management or relationship managers in about 5-10 years? Are they at the end of their life cycle? Just.
No, look, as I said before, I don't think at all. I mean, in the more retail or affluent space, I could imagine that a lot of the solutions are 100% digital. And that you help yourself because it's just easy and convenient, and the problems you have are not that complicated. But as soon as your life, if you are, I don't know, a tech billionaire, first of all, you are by definition global. You have businesses all around. You have a family. It becomes complicated. This is nothing that today a technological solution can solve for you. Here you need somebody who listens to you, and sometimes it's just the listening to you that actually makes the difference. So I don't think that the client advisor will ever disappear. I think that actually there will be a serious upskilling happening in the wealth management industry, because actually technology will take a lot of the administration that today client advisors are doing away. So the value add needs to be on top, which I think, yes, serious upskilling, but they will not go away. Not for, ask me in 20 years ago, again, then I probably have a different answer, but I would say for the next 10, no chance.
When we celebrate 170 years of UBS, I'll ask you again.
Yes, exactly.
So Roland, as a last insight from you, what's your take on the whole relationship management part? Because you started, on the green field.
Yeah, I would agree with Vivi. However, it depends pretty much on the product you are selling. Let's say a product off the shelf, let's say in the asset management, an ETF. This can also, to a certain extent, be distributed by a robo-advisor, and in particular for the millennials and those affluents in that generation. And there's a high likeliness that there will be further adoption taking place. However, when it comes to high net worths and ultra high net worths with more complex structures behind it, I also have not seen a solution yet to replace that. And I think that the human factor is a very important one. because I want to speak to a human also if I have, let's say, if I need advice around how to diversify my portfolio.
Thank you. So then a sum up from the humans on this call. Apparently, we're not all AIs yet. Some of the sound bites we had was Vivi said, you cannot invest in everything. You need to, at the same time, invest today, tomorrow, and after tomorrow. It's a constant transformation. It's not one sequence of individual parts. You can't actually run too fast. And he admitted that he's a little bit of jealous of Fintech as an inspiration every day, actually. Nicole shared that that leadership, communication, and culture are the key drivers for successful transformation projects. And she mentioned the term wise pivot. Keep in mind who is your customer now and how you cater to them while simultaneously planning for the future. It's like the typical change the wheels on a car while it's speeding up kind of approach. Roland, from his experience, was sharing with us that technology is the main driver of innovation. So building banks on top of the right technology systems is key. And he's proving that with Sygnum. And then last but not least, we were asking about, what makes a successful transformation. Nicole was sharing strategy and vision, Vivi passion and stamina, and Roland was about flexibility and right technology. So I think that sums it up. Thank you so much, Vivi. Thanks, Roland. Thanks, Nicole. And of course, as always, Andreas, keeping us all sane, in check, and on track.
Thank you, everybody. On behalf of the Swiss panel. Great panel.
Thank you, guys. Thank you very much.
Thank you.
Bye-bye. Bye-bye.
And of course, a big shout out to SwissJam and Deloitte that made not only this episode, but the whole DX Leaders series possible. So thanks for everybody tuning in, and we hope to see you again soon for episode 10. More details are on the screen now. Innovation in digital banking and customer engagement. So going a little bit more concise on what we started on today. See you hopefully next Thursday, November 12th. Thank you very much, and bye-bye.
Thank you.
Bye-bye.
Bye.